Welcome back, guys. Jai Shri Ram. Today we are going to talk about liquidity in the Forex market. Types of liquidity. We have two types, that is internal range liquidity and external range liquidity. Okay, without further delay, let us hop on to the content. So I'm going to consider our gold, the famous gold on 1 hour time frame. So I'm not going to zoom in, zoom out or do anything. Just for the ease of understanding, I'm going to explain liquidity on the same chart. Okay. Um, if you already watched my previous videos, you guys should be knowing that gold is right now in an uptrend. So let me draw the major BOS. That is first one, this one. This is our major BOS. Okay. And the second one would be this one. Okay, so we have two major BOS that is shown in gold, but we have many internal structures. I'm going to not touch up on that, but I'm going to stick to explaining liquidity in detail. Okay, so now we can understand external range liquidity very easily, but for internal range liquidity it is kind of confusing, but if you can get it right, and that's the best strategy to trade, believe me guys. It's my personal strategy. So uh, yeah, let's continue. What is liquidity? So liquidity is, if I have to tell in simple terms, liquidity is just the pending orders that are left in the market. Okay, so I will repeat once again. Liquidity is just the pending orders that are not executed in the market. Okay, so when do we have pending orders? Right, so when we have institution participation in the market, then we will have liquidity. Okay, when institutions tries to move the price very rapidly, like what happened here, this range price moved without any retracement, so it moved like very quickly to this range, right? So the up move came with a lot of momentum, so then we have a lot of liquidity in this pool, in this range, right? So this liquidity will be taken some or the other way. You guys can see how it reacted. See, like for example, I am telling that this price range was the place where institutions tried to, I mean not tried, institutions moved the price very rapidly because they punch in big buy orders or big sell orders. So when they punch here, they have punched a buy order which is very big, and the market has moved drastically to consume all of them. And if you can see, it came back somewhere near it and it moved, right? And you can see in the next consecutive terms, I'm just, I've just marked this liquidity, and this liquidity is called internal liquidity. Okay, so the price is coming back to a point to take liquidity, so this is called internal range liquidity. So in this internal range liquidity, you can see that price came in once, it moved up, price came in twice, it moved up, thrice it moved up, fourth time it moved up, and then it fell. Okay, so yeah, this I know this is kind of manipulation. This entire breakdown from this liquidity is kind of manipulation, and you can see that many retailers like us would have entered on this liquidity thinking that it is going to break this high. And what has happened is, after reacting to this liquidity, the price has come down, taken all our SLs, and see how it has moved up. Okay, I know like there are internal structures, but still how it has moved up. So we need to agree to the fact that institutions will need to manipulate our SLs to get more and more orders for them, and that is what has happened here. Okay, but this point is where the internal liquidity is there. So yeah, and that is the major internal liquidity. And if I have to talk about the minor liquidities, then see, every time liquidity will be in the previous low in a bullish market, and will be on the previous high in a bearish market. So let me just draw some liquidities, internal range liquidities, and show you how the market is reacting over there. So yeah, we have here internal range liquidity that I drew. So this is one. Okay, and when we have another break, it came down, another break, we were supposed to have internal liquidity here. We did have it. If you can see, we had some internal liquidity. See, the price came, it tapped in, went up, it came in, it tapped in, it went up. See, the thing with liquidity is the market will react to liquidity, but it is not assured that okay, this liquidity, the price will bounce back and go up. No, that is not right. But each and every liquidity that we find in the market will react to it. Okay, since this is a 1 hour liquidity, maybe this reaction we could have captured long positions maybe in 3 minutes or 5 minutes. Okay, but the thing is that this liquidity is not enough to put the market back to bullish direction. Okay, but the thing is this liquidity is respected. That is why we have this small retracement. Maybe in lower time frames we can see this retracement in a more evident way, but since we are sticking to 1 hour, this is what we are able to see. Okay, and if I simply stick to our CHOCH and all those things, so we have our CHOCH here trading the minor trend, that is the bearish trend. So since we have CHOCH here, I can see that there is a huge liquidity here, right? So we have a huge liquidity. The price moved very drastically, so we have some liquidity, and institutions are always responsible for these kind of drastic moves. I mean, how can you or me with a small account, that is retailers, can move the market with this much magnitude, right? So it is always supposed to be institutions. So the institutions has moved the market, and see how drastically it has fallen. So we have some liquidity here, right? And let us see how the market will react after coming to this liquidity. And this liquidity is going to be our internal liquidity for our bearish side. And you see how market came near to the liquidity, and it fell, right? And again it came near and it fell. Okay, and also it came a little bit above, but it fell, right? So that's what I'm trying to tell. See, if you had traded this setup, I'm going to teach entry techniques in next videos, but if you had somehow traded this setup, you would have had a very good trade, right? And if you had traded this setup, you would have had an average trade, because it gave a decent move towards the bearish side, and we could have locked in small profits, which is good. But if you see this one, if we had taken short here thinking that this liquidity is taken, we see that we did not have very good move, right? But the thing that we have to see is that the liquidity was respected here, right? The liquidity was respected. It came down a bit, and then it started moving up. Okay, so I think uh, from these examples, internal range liquidity should be clear. And maybe just since this leg is beautiful, I'm going to explain this. So we had a down, we went up, we came down, we went up, we had BOS. I will mark the minor BOS here. Okay, since we had a drastic move from here, we have a liquidity. And see how the price came back to liquidity. I know it's not touching, but it did come back very close to it, right? So I'm going to show how precisely to mark all this internal liquidity range and external liquidity range, okay, in the upcoming videos. But we have to consider the fact that once we draw the liquidity, how the price is coming near to it and it's having a reaction. So, and again we have a BOS. Okay, it did come back a little bit, and again we have a BOS. Okay, so here we do not see any drastic moves. Okay, but yeah, so this is what is about internal liquidity. So now I will just clear all these things so that we can understand what is external liquidity. So the external liquidity happens after break of structure. Okay, so here we have this resistance, right? This was the highest point for the previous uptrend and we have broken it. Okay, the sellers that were sitting in the resistance have lost their trades, meaning their SLs were taken. Okay, so we breached their short positions and we made a new high. After making a new high, we know that the market moves in this formation: higher high, higher low, higher high, higher low, higher high, higher low. Or if the market is bearish, then lower low, lower high, lower low, lower high, lower low, lower high. Okay, this is how the market is moving. So now, since we have come in a uptrend, made low, made a new high, broken the previous high, made a new high, then what can we anticipate? So we know by experience and we know by knowledge what we have to expect is we can expect this higher low formation. So if we need to have this higher low formation, then the market has to come down. So that is what the market is doing, right? So we had a BOS and the market came down. So this BOS that happened here is what is external range liquidity. Okay, so once the resistance is breached, there will be some sellers that will be sitting in this range and all their orders are getting executed and the market is moving down because of that. Okay, so this is external range liquidity for buy side. And if you want to go for sell side, right, I mean, okay, this example that I've considered is a very bullish market, but maybe to explain what is external range liquidity, we can consider the minor trend here. We have uptrend, we have minor uptrend, we have in minor uptrend we have many BOS, right? So now we came down, we could not break the high, so we made a lower high and we broke down again. So this will be our CHOCH, right? This will be our CHOCH, and this low right now, since we are considering the minor trend, this will be our major low, and this low break will be external range liquidity break. Okay, so this low break will be our external range liquidity break, and that is what the market has done. And again, the next external range liquidity is at this low, right? And we have another external range liquidity break. See, this is the same, this is minor trend, but if we see the major trend, we have one BOS here, again down, again up, the second BOS here. But we have to consider the fact that if I just now shift to 4 hour or maybe 1 day, this the major trend that I have drawn, the two BOS will be more evident. If I shift the same chart to 15-minute or 5-minute, this CHOCH, this BOS and this external range liquidity will be more evident. Okay, just that we have to stick to our trading time frame and we have to know which side we have to trade. Okay, just to summarize, liquidity is the pending orders that is there in the market because of institutional price action movement, and we have two types of liquidity: internal range liquidity and external range liquidity. Internal range liquidity is created by large moves that is done from the institutions, so the price comes back to that range and moves in the previous trend direction. And in the external range liquidity, the previous resistance or the previous support, we have two examples. We have it will either take the previous high or it will take the previous low in either the bullish trend or the bearish trend. So when we have taken the support or when we have taken the high, then we will call it as external range liquidity. Okay, and after taking external range liquidity, there is high possibility that the market will reverse to form either a higher low in bullish market or a lower high in bearish market. Okay, I hope this is clear for you guys. If you have some doubts, please comment and let me know. Please do like, share and subscribe to my channel. Jai Shri Ram.